In this video, guys, we're going to look at, don't forget to factor in the fact that a market could stagnate. We tend to think, oh, it can either go up or down, but don't forget to factor in this into your trading plan or outcome. Stay tuned. Hey guys, very warm welcome to you. All right, so we default to this, don't we? Default to this, right? There's my trade. I'm either going to get stopped out or I'm going to make my target. And we kind of have this binary event. But very often it's easy to overlook the fact that the market could stagnate and do nothing. And we kind of catches us out a little bit sometimes. If we don't prepare for it, it can catch us out. Because we take the trade and we sit there and we think it's doing nothing, and then we kind of go, well, you know, do I give it some more time? Do I add to the position? Do I cut it? You know, what do I do? And it can actually really confuse us. And then when it kind of does something, we're either so eager to take the profit because we've waited so long for it, or we kind of feel like we should give it a bit more room because we've waited so long, or any kind of number of those outcomes. And so, especially in these current conditions, guys, you know, I want to hit the screens in a moment and talk about, you know, one specific example where, you know, you immediately, especially when you've had high volatility as well, when you've had high volatility, you know, your immediate bias is that we're going to have more volatility, more move, more extreme moves. It's going to stop me out straight away, or I'm going to get I'm going to get my profit, I'm going to get my profit targets, all that kind of stuff. But, you know, in reality, as things start to calm down as well, and I'm feeling this during the coronavirus impacts on the markets, you know, we don't necessarily consider this, and so we don't necessarily plan for it. Now, most traders are going to have a stop in, they're going to have a target in, or they're going to have scale positions in. That's pretty much normal in how most of us trade. But very often, overlooking this stagnation really doesn't help us, because we don't know what we're going to do when it comes about. We're like, well, you know, what should we really do? So let's hit the screens now. We'll look at a currency pair that did that recently, and kind of think about the process of how we could think about this a little bit more when we're planning our trade out. So let's hit the screens. All right, guys, in the screens now, it's USD JPY, but what I wanted was GJ actually, because this was brought to my attention by another trader a while ago, and it was a good play, very good kind of read, and it was something that a few of us had looked at. Let me just clear some of this. These off specifically. I want to leave that on though. So the thesis is, okay, you know, push back up, rolled back, kind of retraced back, slightly gone overbought, and stagnating here. So the thesis was, you know, this could start to roll over and give a 4 or 5 day trade from that, and that seemed like a good idea. There needed to be some more triggers involved in that, etc. But you kind of get the idea. This is not a uncommon trade setup. The drive lower, the push back, and then we kind of look for retracement. Maybe not looking for new lows, but looking for at least to take some out onto that 2 or 3 day move there, and then maybe pull some stops up, let it stagnate, let it do what it needs to do. However, you know, if we look at what actually happened here, let me draw that back on that rectangle, because that's a useful little area here. So if you look at what actually happened here, guys, you know, we started to roll, but then we just stagnated in this box for a long period of time, and it's too easy to say, right, we're going to roll over immediately, because you've seen a big drive lower, a big drive higher, so you're expecting either a lower or higher. But the fact that it sat there for 4 or 5 days, drifted higher, took out the highs a little bit, took out the lows a little bit, you know, we tend to forget this. And, you know, whilst it wasn't a trade that I'm involved in, but I've definitely got my eye on it, because I want to see, you know, how we break out this low, how we break out this range, should I say. But, you know, the point is that, you know, we don't necessarily think about this. So one of the tricks we can do is, once we put our stop loss in, fine, or we don't, maybe we haven't got the trade yet. Maybe in this scenario, like, okay, I want to see something before I even take the trade. So maybe you haven't got your stop loss in, but you're always going to think of your stop loss and your target. But one extra thing that's really worth adding in this environment, guys, is to say, okay, how many days will I give it until I will reduce the position? You know, do I need to give it a long period of time, or do I need to give it a short period of time? You know, in my opinion, the longer the trade is sitting stagnating, generally the less valid it is, and the more likely you are to get whipped one way or the other. Because very often we kind of sit in a range, we'll make a drive move, we'll sit in a range, if I can get my little brush out, you know, we make a drive, and maybe we'll make a play to kind of, we want to push on for a little bit further move. But the longer we tend to sit in the range, the more likely actually we get this, the break that fakes, maybe you get a fake lower, and then it kind of does what it wants to do. It might drift lower a little bit, but you know, you lose the juice from the trade, if you like. You lose the momentum, you lose everything about it. And so in my opinion, and this is not always the right way to do it, because I know some people just say, hey, it is what it is, I'll leave my stop and leave my target in, and it is what it is. You know, if you're trading this specific thing, make sure you say to yourself, all right, if it goes more than, say, 4 days where it's just chopping around doing nothing, I'm going to close a position, or I'm going to cover half, or you cover a bit and widen the stop and widen the target, or you do something with it. I feel like being proactive with the trade is the right thing to do, because you know, even if you're not doing anything meaningful with the trade, or even if you're saying, right, I'm just trimming in 10% off of it or 20% off of it, and it's not really going to have a material impact on the bottom line, what it's doing is it's saying, hey, I'm back in charge of this, I'm in charge of my trades, I decide when to put risk on the table, I decide when I'm going to be exposed to market moves, and it makes you feel like you're doing something, because you can feel, you know, when you, let's say if you were shorting this here for whatever reason, you're shorting this here, and it, you know, let's say it pushed out for the high, failed back, break back down. You got one day up, one day down, one day down. You know, you're sitting here thinking, right, you know, I'm vulnerable to the market. Not only in this current conditions are you vulnerable to binary news coming out, because that's what's happening quite often. This is what's kind of forced this market up high here, and Euro, USD, but that's irrelevant. You know, the longer you're in the market, the more exposed you are is one thing, especially when you're in the vulnerable part of the trade, which is at the beginning. It's a little bit different if you've got, you know, a lot of cushion in there. You can sit through some little impact shocks, because it's going to take a lot of shock for you to kind of lose any money, your money on the trade. So when the trade's in the cruise, so to speak, you're a little bit more cushioned, but it's the most vulnerable and you've got the most risk on the table when you first take the trade. So if the market is sitting, oscillating around your entry for days and days on end, it's actually mentally quite challenging as well, especially if you're a momentum trader, a swing trader. You look for those 2 or 3 day moves. You know, if it's been 2 or 3 days and nothing's happened, you've got to consider ditching it. You've got to consider saying into your plan, hey, I was looking for a 2 or 3 day move. I've given it 2 days already and it hasn't really moved. It's just sat there and done nothing. Does it mean that it's not going to move? No. Does it mean that I should do something to it? Possibly. I think that being proactive and being pretty ruthless with these things is the right way to do it. You can always reevaluate, and listen, you know the score, guys. Probably when you dump it, the minute you close it, it's going to push lower. But it doesn't matter that. The point is if you've got your rules and you're sticking to it, then that just is much better way of trading. I think it is, because you're just taking back control of your trades. You're not letting the market control you. You're saying, hey, I'm going to give you 3 days to move, and if you don't move in 3 days, then I'm going to cut you and I'm going to reevaluate and reassess. Now, does it mean I won't take that trade again? No, but it does mean that I'm just taking a bit more charge of the situation. Same thing with, obviously it's going to be similar with the pound yen, but pound US dollar pushing up, you know, sitting there, maybe looking for the retrace lower, but then when it's just sitting doing nothing for a long period of time, you've got to consider dumping it. You've got to consider getting out of the trade. You've got to consider the fact that, hey, it's not moving as I expected it to, let me ditch it. So guys, it's something to consider. It's something that we forget, and I think that the more that we can think about every single permutation and outcome of the trade, the better we can have control. Now, does it necessarily mean it's going to improve our bottom line from the number of trades that are profitable? No, but I do think the mental side of being in control, as I said before, really means that you feel more in charge, you feel more confident, you feel more comfortable, and you feel more disciplined. And everything, guys, is about improving those discipline muscles. You're basically saying to yourself, hey, if the market doesn't do this within this period of time, I'm not going to give it any more. Now, that might be 10 days for you, that might be a week for you, that might be even longer. I'm not saying it has to be that, but it's having that written down or having that thesis aligned so that anything that happens to that market when you're in the trade is not a surprise. It is not controlling you, you are controlling it. You're prepared to cut the trade at a loss. You're prepared to come out with a stop. You're prepared to take your first profit, your second profit, your third profit. And having that plan and preparation builds confidence, it builds discipline, and it's well worth doing. So think about that, guys. When you're planning your trade out, of course you'll stop, of course you'll target, but what about if it just sits there and does nothing? How will you react to that? And think about what your outcome would be, how you would manage it, because that will put you in a far more powerful position, I believe, than just sitting there and going, oh, I don't know what to do, hasn't hit my stop, hasn't hit my target, should I hold it, should I cut it? And you fall into the trap. The final thing, guys, we fall into the trap of then looking around, don't we? Looking for data, looking for news, looking for people's sentiment, looking for how people are looking at euro or yen or this stock or that stock. And then you fall into the trap of, hey, you're well out of your reason you took the trade now, the setup's long gone, and you're in it and you're holding it, hoping that it finally hits your target. But something to consider anyway, guys. Keep your risk managed though, whatever you do, don't forget to keep those stops in. It's an event-driven market at the moment. There's a lot of binary events coming out that are spiking things back and forward. So, even though sometimes it's frustrating to get stopped out and it comes back, you've got to keep your risk capped and you've got to make sure that none of those are going to hurt you. Take care, guys. See you in the next one. Bye-bye.